So should investors expect more near-term volatility in the oil market? Our guest tonight says you can bet on it. Janelle Nelson is portfolio analyst with RBC Wealth Management. Janelle, welcome and happy day after Thanksgiving. I want to talk to you broadly about the market, but let's begin with oil. How close does your spidey sense tell you we are to that point at which oil company shares are a buy and the oil price might turn north?
Well, I think what we need to see, Ty, is we need to see a response to the outlook for 2015 by the exploration and production companies. I just attended a conference down south, and my sense at that conference was there was a lot of complacency. Nothing gets a company's attention more than when the commodity price falls 10% in one day.
Let's go to a broader question about where the markets you think are headed. My notes tell me that you think we're in the middle, or the early innings, I should say, of a secular bull market that you think began in 2012 and 13. What does that look like, and does that mean necessarily that we won't have 10%, 15% declines within that context?
Well, exactly. Well, when we say a secular bull market, what we mean is that the markets get substantially better over time. Bull markets start when everyone is still crying in their beer at the end of the day. What we believe is happening is that the trend toward energy self-sufficiency, the valuation of the market, and the fact that most people are still skeptical of equities means that we're on a trend after 15, 16 years in a bear market on a secular basis toward better underlying markets over time.
Let's go to a couple of your choices, if we might. And I guess your framework here is if oil prices start to turn up, if oil prices remain relatively stable, or if oil prices decline. So let's start with EOG Resources, which is the assumption that oil prices are at or near a bottom and start to move back. Why do you like that one, and what's your price target on it?
Fundamentally, what we like about EOG Resources is they're free cash flow positive, so they're self-funding. They're able to grow acreage without making acquisitions. Thirdly, they're in a position where they have a footprint in the major core acreage in the Bakken and the Eagle Ford, and at even $40 a barrel oil, we see them still getting a 10% overall return. At present, they're getting 100% return on their core wells. We think the stock can trade well above where it trades currently, perhaps as much as $20 per share higher. Bottom line, we think the company is quality. You want to buy quality because quality gets thrown out in the bathwater with the stuff that isn't so quality.
Yeah, I've heard a lot of people talk about the capital structures and the level of debt that some of the shale plays have. This one, you believe, has a very strong and stable capital structure. Oil prices continue to decline. Your second pick would be Walmart. It's had some nice runs here lately.
Well, you know, as a girl from Minneapolis, it's not often that I would recommend Walmart. But here's what Walmart is doing. One, they're getting great opportunity from e-commerce. Their investments are working. Secondly, they're opening smaller stores in the most recent quarter. Comp store sales are up 5.6% versus just 0.5% for the whole. And perhaps most importantly, the demographic for people who make $40,000 a year or less. Low gas prices at the pump means more money spent at Walmart.
And trading range pick is Lennar, the housing company. Quick thought on that one, Janelle.
Bottom line, we believe that the housing sector is still in recovery. Tepid recovery, but in recovery. Lennar has one of the best returns on invested capital in this space. Secondly, over the past 6 years, when most of its peers were selling land, they were acquiring land. And we think that they are a key company in what our industry analyst has termed the golden horseshoe. California, Oklahoma, Texas, Arizona, Florida, Georgia, segments of the market that got hurt the most, they have done a great job picking up acreage.
All right, Janelle, we got to leave it there. Now, you get busy and go to Mall of America there in Minneapolis right now. Okay,
I will
Janelle?
do that.
All
Absolutely.
Right, Janelle Nelson with RBC Capital Management.